Hi friends, in this video we'll learn the closing entries relating to the profit and loss account. In our earlier video we have learned the closing entries relating to the trading account. So in this video we'll learn what are the closing entries which are passed for preparation of the profit and loss account. Now let us see the closing entries relating to P&L. The first entry which we'll write is for transfer of gross profit to the P&L account. For transfer of gross profit to P&L account. For transfer of gross profit to the P&L account, we are going to pass the entry trading account debit to profit and loss account. So the gross profit will be transferred from the trading account to the P&L account with the amount of gross profit. If there is a gross loss, the entry would be reversed and will pass the entry profit and loss account debtor to trading account. For transfer of expenses to P&L account, the expenses which are not recorded in the trading account have to be closed by transferring them to the profit and loss account. For closing those expenses which are not transferred to the trading account but transferred to the P&L account, for transfer of expenses to P&L account. By doing this transfer, the expenses will also get closed. So what are the entries we pass for closing these items? The entry will pass is P&L account debit, like expenses like salaries of staff, rent of the office, the godown, the warehouse where we are keeping the goods, to depreciation of the assets which we are using for the business, to repairs and maintenance expenses, to stationery, to carriage outward, the expenditure incurred to distribute the goods, send the goods to the customers, to freight outward. If we are sending the goods by ship to other countries, we use the word freight. Carriage is for road transport. Advertisement, if you are incurring any expenditure for advertisement, that expenditure is also debited to the profit and loss account. Bad debts, if customers do not pay the amount, we debit the amount to a bad account called as the bad debts account, so that will also be debited to the P&L account. To discount allowed, if customers are willing to pay money early and we give them some discount, that discount is also debited here. If we are paying any commission to any broker for getting the goods sold, that commission is also debited here to commission. To general expenses. So normally all the expenses are debited to the profit and loss account and closed. So these items, by passing this entry, what will happen is these accounts will get closed and their balances will be transferred to the profit and loss account. So this is the entry we pass for closing of expenses accounts. Next, there will be some incomes which have not been transferred to the trading account. Those incomes have to be closed by transferring them to the profit and loss account. We'll pass the entry for transfer of incomes to profit and loss account. What type of incomes are transferred and closed to the profit and loss account? Incomes like discount received from suppliers. When we make the payment early, the suppliers may give us some discount. The discount account might be showing a credit balance now. It has to be closed by transferring it to the P&L account. That is where that account is debited. Commission received. We have received some commission for the services which we have provided. So that account will be showing a credit balance. That account has to be debited and closed. Bad debts recovered. If we are able to recover some money from the bad debts, that account is an income for the business. So income will be debited and transferred to the P&L account. Income from investments. We have made some investments, like we have purchased some shares of other companies, or we have invested money in fixed deposits of the bank. So we are getting some income from investments. So those accounts will also show a credit balance. Those accounts have to be debited and then transferred to the P&L account. Income from investments. Profit on sale of assets. If we have sold any asset, the profit on sale of asset would be showing a credit balance. So that account also has to be closed, and by debiting that account, we close that account. So these incomes are transferred to the profit and loss account credit side. So with this, these income accounts show a credit balance. They are debited and the account is closed, and the balance are transferred to the P&L account. Next, if there is a net profit in the profit and loss account, net profit transferred to capital account. So if there is a net profit in the P&L account, that net profit is transferred to the capital. What is the entry we pass? P&L account debit to capital account with the amount of net profit. If there is a loss, if net profit, this is the entry. If there is a net loss, the entry would be capital account that are to profit and loss account with the amount of net loss. So by passing these entries, we prepare the closing, the P&L account, and the incomes and expenses are closed. I'll prepare the format of the profit and loss account here for you. Profit and loss account of a trader for year ended 31st March 21, let us say. We will have particulars, rupees, particulars, rupees and rupees. 2 salaries, 2 rent, 2 stationery, 2 bad debts, 2 discounts allowed. I'm just posting the entries which we have already passed. 2 discount allowed, 2 depreciation, 2 repairs, 2 carriage inward, 2 freight inward, 2 general expenses. So like this, we debit all the expenses to the P&L account. These expenses are closed. We credit the P&L account with the amount of gross profit. By gross profit brought down from trading account. So trading account is debited and P&L account is credited. So P&L account will be credited with this amount. Then we also credit incomes to the P&L account. What are the incomes we are going to credit to the P&L account? By discount received, by commission. If you are getting some income from commission, by income on investments, by bad debts recovered, you can have, if you are getting some rental income, you can write by rent income. So incomes are credited to the P&L account and closed. Now the difference between the credit side and the debit side. The credit side is incomes and the debit side is your expenses. The difference between the credit side and the debit side would determine net profit or loss for the business. So what we do is we total the credit side, we put the same total here, and from this we are going to subtract all the debit item. The amount which is left is called as net profit, which is transferred to capital account. Right here, net profit transferred to capital account. If the debit side was higher than the credit side, then there will be a loss. We'll write by capital account transferred to the net loss transferred to the capital account. So this is how we prepare the profit and loss account of a business by passing closing entries. In our earlier videos, we have learned the closing entries relating to the trading account. In this video, we have learned the closing entries relating to the profit and loss account.